Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elconin, along with Spencer Israel, and we have Chris Brecher on the line. He is another one of the great traders and analysts from Simpler Trading. Chris, how you doing today?
I'm fine. How you doing?
Doing good. So I see that you went to college for paleontology and marketing. So what were you going to do? Were you going to dig for dinosaur bones and then sell them on the internet? I mean, what was your plan
Oh
back
man,
then?
we could go into this for hours, but basically, I was always into dinosaurs. It's a long story from the '64 World's Fair when they
Okay.
had the Sinclair exhibit with dinosaurs.
Okay.
So
Okay.
I kept that going. Wanted to go in digs. Decided I was a little more social than that, and a lot of the people trading don't remember a real recession other than 2008. Big recession in 1980 when I got out of college. Went and worked for one of those penny stock firms. Watched everybody there hardly get any clients, so they took shots and options. They were all losing money, and I'm like, well, who's the house? So I basically, after a year there, went to work as a clerk on the floor at the CBOE, taught myself how to trade. And nobody took me under the wing. After a year, I went to work at a discount brokerage firm for 2 years. The big incentive was I got to trade my own account commission free. And my parents sent me a plane ticket for $200 to meet them in the mountains. I took that money that day and doubled it buying Valley put options. So now I had $200, turned that into $23,000 in 2 years, and then went to the floor of the CBOE and was there for 8 years in the IBM.
When were you at the SIBO?
I was at the CBO I was a clerk in 1982, right when the explosion in August happened, the beginning of the bull market. I traded from 85 to 93 on the floor.
Okay, I was at the Merck from 85 to 92. I had some buddies, Larry Mertz, John Schuler, Ronnie Klein, that traded in the OEX. But that's good from the floor days. And you wanted to know basically who was the house, and that's what got you interested. So that obviously that got you kind of interested on the selling end of options, right?
Yeah, but what happened was because that 2 years where I sort of taught myself when I worked at the discount brokerage firm, I had to learn to buy premium because obviously I had a tiny account. So I had to learn the correlations between the bonds and the ticks. And back then you only had a Quotron. So you're sitting there pressing like ticks. And if you saw the ticks start to go down, you look for the stock shorts that were already acting weak. So you didn't really have much of technical analysis right then. You had to go more on how a stock was acting relative to the rest of the market. So in short, I had to learn how to actually trade stocks instead of just being the edge. So when I got to the floor, people loved me in the crowd in the IBM pit because I was more going on directional trading and they were going more on selling on the ask and buying on the bid. So they were more than happy to oblige me the first day I was there. But what that helped was when I finally left the floor to go trade for a electronic trading firm for 9 years. When I left the floor in '93, because I sort of saw the tendency toward electronic trading, because we started to get picked off a lot on the floor, they said I was one of the first traders from the floor to be successful because I learned how to chart and how to just not have an edge.
What firm did you work for there that you managed the top 5 out of 800 traders? What firm was that?
Oh, it was called Electronic Trading Group. It was
Oh, okay.
absorbed by. Oh, you know them?
Schoenfeld, yeah, a couple.
Yeah, they were bought by Schoenfeld.
Okay, yeah, a couple of my traders that I started the Detroit office with started out with ETG in Chicago, and
Oh,
they,
that's funny. Yeah,
yeah.
I opened a lot of offices for them in Atlanta.
Okay. All right. Well, no, I just wanted to get your background there. I see the floor and I see trading firms, and it's similar to my background, so I just wanted to touch on that. So, now you're off the floor, you're trading yourself, you're trading the options market. Just real quick, I mean, if people want, let's say they know nothing about options, they have a nice brokerage account, they've been building up money over the years. What's the first thing you would recommend for someone that wanted to learn about options?
Well, the first is to be sure that you have the technicals down and know how to trade directionally. That's number one. Because I think the way I trade is I try to work, and people at Simpler Options know, and I guess my record there has been pretty good. I try to trade verticals or butterflies directionally according to how the stock or the market looks. And so the first thing is to be sure you are successful as a stock trader. That you can't go in thinking, oh, I've never made money in stocks, so I'll trade options. That's a lot more difficult. Now, the other thing is, if you have a real large account, sure, it's nice to sell out of the money options in the direction of your technical analysis. So then you have the edge of time working in your favor instead of the opposite, like what I did my first 2 years. I mean, that was highly unusual to be able to buy premium for 2 years and make money.
Definitely.
But the key is definitely, if you're going to start in it, I would first start by having a feel of the market, number one. Number two, I probably would first start by selling out of the money credit vertical spreads to get a feel. So I know.
Give us an example. Give us an example here.
Yeah, sure, absolutely.
Let's give
like Apple. Let's say that Apple right now, on a chart, right now it's sort of in a zone of no person's land right here. But let's say in your technical analysis, you said Apple was going from 118 to 115 in the next month. So what you do is take a 2-week out vertical and probably sell the 120, 122 vertical spread that's out of the money for, let's say, 70 cents.
Okay.
So that way, at least you have your risk limited by the width of the vertical, plus you have time working in your favor, so you have to be really wrong on time and direction.
Okay.
So that's how I would start if I was first doing options.
Right, and then you're selling options there, but you're doing it capped. So 120 to 122, it's a $2 maximum loss. If you're selling it for 70 cents, the worst you can lose is $1.30. And every day that it sits there and grinds in a half a point range or whatever, or as long as it doesn't break above 122, even if the stock moves up on you and moves up to 119 and change, or barely gets into the 120 handle, you're still bringing it in. So that's a conservative way to sell options, and still take advantage of the house and selling time. So let's get to some setups here. It's 10 after 9 here on Cyber Monday, after Black Friday, Thanksgiving weekend. A lot of comments from the retailers. It seems like the Christmas shopping maybe even started after Halloween here. What's your take on the Christmas shopping so far?
Well, it's funny is I was going through just scanners. I usually go through 500 stocks on a weekend. Now, I know, I usually center down to 10 of the big momentum stocks, but when I looked at them, I was like, well, why did Abercrombie and Fitch just explode? This and that, and if you rank them, the best performing retail stocks the last 2 weeks have been the ones with the highest short interest. I mean, very interesting that that's happened. And because I asked my daughter, she's 16, why Abercrombie? Do you shop there? She said, no, I haven't been in there in years, but it all has to do with short interest. And I mean, look at that stock. I'm seeing it. I actually have your Bloomberg, your Benzinga up there right in front of me. So I'm saying, you see it went from 19 to 26 in 4 days. I mean, that's a short squeeze if I've ever seen one. What I've seen, though, and I've tried to explain in the Simpler Options Forum, is a lot of what I'm seeing is not Black Friday. It's not same-store sales today or yesterday. It has to do with a secular shift right now. And what I mean by that is instead of cyclical, because I think of Michael Kors and Coach as cyclical. They go in and out of favor. But I think a secular is more the Walmarts and the Targets, which are, Walmart's on a 3-year low. That's a secular change because of Amazon. That Amazon is just really eating Walmart and Target's lunch. And so you go through what you do every day and you see the secular change. That's why you have this thing FANG, where you have Facebook, Amazon, Netflix, and Google. Everybody calls them the FANG because the secular shift is toward those companies. And so what's happening then is you get the Macy's, you get the Nordstroms, you get the Dillards underperforming for that reason. And then you have the other thing, you have like QE that's obviously gone, but you have money sloshing in the system. And you see what is near a new high for the year, you have the TIPS. So you definitely see a whole secular shift here of the 1% of the world, benefiting Tiffany, and then you have the Amazons hurting the Walmart and the Target. So now you see how the tiers work. And that's what I'm seeing right now is the entire shift.
So looking at this Abercrombie and Fitch here, I mean, when I look at this chart here, man, you got a triple top in there. Someone really has an opinion here at the 27 level. Last three highs, 689, 692, and 693. Is this something like after this run it's had, maybe you'd be looking to sell like a 28-30 call spread here or something like that? Or are you just going to try and ride the momentum here and actually try and get long this thing?
It's funny. I'm looking at a chart of it, and I'm looking at your chart, and then I'm looking at mine on Thinkorswim. And you say, well, on a weekly, it looks like it's turned the corner, this and that. And if I hadn't seen the short interest so high, I probably would want to buy after it's worked off some of the overbought condition. But I have to think that this is just a short squeeze. It's going to go settle down. I think you're absolutely right to look at the 30. Well, let me look. The problem is the expected move, like Thinkorswim shows it, is so small that even if you go to December, 18 days out,
you can't
the
get
30s are only 20 cents.
Yeah. Okay.
So let's say you do the 27.29, but that's being pretty aggressive because it's almost 27. But
let's do it for fun. Let's be aggressive. Let's do it for fun here. What's the 27.29?
Yeah, sure. Let's see, 27.29. You can put in like a theoretical in here. So I'll just do it theoretically where it was on Friday. So you could do that one for 65 cents at 27.29. See, that's not bad. The problem is it hasn't rolled over yet. So you're sort of moving in front of a freight train here. I'd like to see it the way I do technically, that at least on a short-term chart to get under something. I mean, It's over every moving average, everything.
What would be that something that you would look for? Just, not so much in Abercrombie and Fitch, but just in general, maybe a few of the tricks of your trade here in your technical analysis.
Oh, sure. Well, one, just remember, the way I look at it is usually at holiday times, it's really hard. Stocks have a tendency to go up in December, and retail stocks have a tendency to go up in December. But if I was looking at a weekly, daily, I would scroll down to a 78-minute in Abercrombie where it's still above every moving average I watch. Then I would go to a 15-minute until I see it roll over, and it's close. If it doesn't hold 26.50, I would rather sell that spread at 55 cents on the way down than 65 cents here and be a hero.
Did you say the 78-minute chart?
Yeah, the way I did that is like John Carter has done that in his book. I'm sitting here pitching his book, but he's got a great book, that Mastering the Trade. And the 78-minute is just with 390 minutes in the day. So if I use a normal market hour chart for equities, 78 is divisible in 390 better than 60.
Okay.
The 60 just cuts off a half of it.
Okay, that's interesting. We've been on the line with Chris Brecher from Simpler Trading, talking about how he got started in the markets, what he's looking at, some of his strategies. I learned a lot today, Chris. I hope we can have you back on again soon.
That'd be great. I love it.
All right. Thank you, Chris.